Hello, everyone, and welcome to today's LRQA webinar, where we'll explore the energy and renewables market outlook for 2025, including the key risks, trends, and solutions that are shaping your business decisions. I'm Josh Flanagan, and I'll be your moderator for today's session. I'm joined by two of our LRQA experts, Leanne Halliday, Head of Energy and Renewables, and Andy Gibbard, Head of Marketing and Client Success for EiQ. You'll be hearing from them both shortly. Next slide, please. So before we dive in, just a few quick housekeeping notes. So everyone is currently set on mute to minimize some of the background noise. Throughout this session, you'll have access to the chat box, so please do feel free to submit your questions throughout. We will aim to answer as many as possible during the session, and we'll follow up afterwards. We've got a Q&A session, but we will follow up afterwards as well with written responses to anything that we don't get to. We will send you a copy of the slides after the session, and additionally, the webinar is being recorded, so we will also send you a recording link as well after the event. Next slide, please. So let me introduce today's speakers. Leanne Halliday is LRQA's Head of Energy and Renewables. She's a chartered chemical engineer with over 23 years of experience in the energy sector, covering design, commissioning, project and sales management across the UK, Asia and Australia. Leanne's been with LRQA now for over 12 years, and she's currently based in Western Australia, where she also contributes to hydrogen and fuel quality standards groups globally. We're also joined by Andy Gibbard. Andy's Head of Marketing and Client Success for EiQ, LRQA's responsible sourcing and ESG risk platform. He has 20 years of experience in assurance, risk management and supply chains, and he's led teams across marketing, communications and client services. Next slide, please. So for those of you who may be less familiar with LRQA, we're a leading global assurance partner operating in over 150 countries. Our services span assessment, advisory, inspection and cybersecurity, and we help more than 60,000 clients manage risk, achieve compliance and build resilience across their operations. So whether it's assuring assets and management systems, strengthening cybersecurity or supporting the energy transition, our aim is always to help organisations like yours navigate uncertainty and unlock opportunities. Next slide, please. So here's a very quick look at what we'll be covering today. So we'll start the session with Leanne, who will walk us through the global energy risk landscape, and she will look to highlight some of the key challenges and trends that are shaping the sector. We'll also explore LRQA's risk management solutions before hearing from Andy about how our EiQ platform enables greater transparency and confidence in supply chains. We'll finish, as I said earlier, with a Q&A session. So again, please do keep your questions flowing through the chat box because we'd love to have as many as possible. And without much further ado, I'm now going to hand over to Leanne. So Leanne's going to get us started with the energy risk landscape and what it means for your organisations.
Thanks, Josh. It's a pleasure being here today and talk to you all. There's a lot to get through. The statistics and the information that we're going to be given is based on the work that we're doing with LRQA across a whole range of stakeholders. So working with regulators, financiers, manufacturers, operators, right away across all the different supply chains, renewables and energy projects globally. We also take a look at some industry data and have a look at what impact that is having on the risk and challenges within this space. When we're talking about energy and renewables, we're talking about all of the impacts that are going to have on us providing electricity, heat, and other forms of energy to the world in the forthcoming years, all in a context of a need for greater sustainability and working towards net zero goals. So we're talking about oil and gas, we're talking about other power resources, and also the renewable impact within this space. So without further ado, let's move on. So first of all, we'd just like to start with a quick poll question. So just to get an idea about what you guys are seeing in this space. So is your organisation, who you're representing, currently involved in any energy transition projects? We'll just take a minute or so to do this. So just click 1. So not yet, yes in the early stages, yes projects are underway and looking at being scaled, projects are operational and embedded into our strategy, or we're not sure. So we'll just give a couple of minutes just for people to have a look at that one. And when we're talking about energy transition projects, this is anything that helps us to reduce the carbon content of our operations. Excellent. So we see some results there. Actually, what I'm seeing there isn't surprising if I look at who was registered for this webinar and also what's happening within the landscape. So absolutely, we are seeing a lot of projects in that early stage, so the planning, pilot projects. We see a lot of projects getting announced, particularly the larger scale projects, that through some of the risks that we're seeing, particularly with regulations, competency in this space, and also supply chain risks, not necessarily getting to fruition. Actually, as an engineer, I was involved in a recent survey by AirSwift where we looked at people working in the renewable industry and their career satisfaction. And actually, that had decreased from the previous year. And one of the things that I gave commentary on, and I'd seen within working with EPCs and designers, is we're seeing a lot of projects not going past that pilot stage or not going past that design phase. We're seeing a lot of feed studies get put on the shelf, a lot of concept studies going ahead. And that's actually quite frustrating from an engineering point of view, where you want to see projects all the way through. Um, we're also seeing that when we look at public perception, particularly when we look at people, my neighbours, my friends, for example, saying, for example, hydrogen, oh, well, that was just a flash in the pan, that's not going to happen. Well, in fact, if we look at some of the projects, we look at the statistics, there is still an industry out there, maybe it's not at the scale that we thought would be there at this point or in the end application. So from a public perception point of view, this is also something that we're seeing. It's also good to see that we have a lot of people on the call who are currently working on operational projects, and energy transition are embedded within that strategy. And that really is what we're seeing on a global scale. So if I go to the next slide. Yep. So what we're seeing here is I've labeled this slide energy transition, the reasons and the reality. So if we look at population growth, we look at energy equality across the world, and we look at projects that are happening globally, we're seeing an increase in energy projects, not only from renewable projects, but just energy projects in general. So while we're seeing an increase in renewable projects, which is great to help towards energy transition, we're also seeing that in context of an overall increase in coal, natural gas, and oil projects. Therefore, if we look at that from a supply chain risk, this has an added impact, whereas we're seeing a much more impact on the availability of inspectors, the availability of materials, the availability of different equipment within this really constrained supply chain, that, and also the restriction of competency and people available to do these projects, which brings with it quality risks, etc. So I think this is a really good chart and one that I use quite regularly just to show people that even though we are talking about energy transition and we see an increase in renewable projects to work towards net zero, we're not necessarily just seeing that. We're also seeing that in a context as overall energy supply growth. Over here, I've just took some snapshots of Google and of news articles to show that even though we have seen some backtracking, and in fact, I would say it more as a reality check on some of our net zero promises, particularly from some of the large multinationals, we are all still working, even if we're doing oil and gas projects, towards a more sustainable overall energy impact. So we look at it from a company-wide perspective. So BP have net zero goals by 2050. From a sports perspective, the Formula One have net zero goals by 2030. Our own company, we have a very transparent Our Planet, Our Plan process in place where we're working towards net zero by 2030. But we also look at it from a country level. Many countries have net zero targets by 2030 or 2050, or even like we look at here, India by 2070 and China by 2060, all working towards goals that are realistic but also quite challenging. I've also put in there a news article that I got where we're talking about the energy transition investments hitting 1 trillion. When you get into that trillions of dollars range, it doesn't matter whether it's 1 trillion, 10 trillion, half a trillion, it's a lot of money, a lot of investment in this space. We also have this in a context, if we look at Europe, for example, where they have a security of supply issue, but we also have activist issues as well. So we're working with lots of different pulls from different directions. The other thing that is getting a lot of attention is when we also talk about what else is driving energy demand. And one of the things that is having a lot of media attention at the moment is energy demand from data centers. We're seeing a big increase in AI. We're seeing a big increase in AI across industry, but also across our own personal use. All of these data centers need a lot of electricity. How do we make sure that's green electricity? How do we make sure that electricity is sustainable? And we're doing quite a bit of work in that space to make sure that we are on top of how we make sure we can track the carbon and get the energy to them companies when they're needed. Next slide, please, Alex. So what are we seeing in the renewable energy space? And some of the statistics we got on these slides are really telling. So one across the top there is what is a really key statistic. So in the next 5 years, there's going to be more renewable capacity added than in the past 100 years. That's across all of wind, solar, hydro, hydrogen, all of the different renewable energy sources. But that just shows you, it gives some context of the amount of gigawatts that's going to be added. If we look at where the renewable energy sources are at the moment, we see that the biggest percentage of energy produced by renewables globally is in Iceland, with around 87%, and Brazil with around 80%. Some of the Nordic countries are up there as well. We also see a real growing trend in China. They had the fastest growing renewable energy percentage last year. They're now looking at around 30% of their energy produced by renewables, with a 64% increase. And looking at added 600 gigawatts of power through renewables in 2024. To give you an idea of some of the other locations, so America's currently looking at around 20%, UK around 42%, predominantly through offshore wind, Australia 30% and growing. So that gives you an idea from a global context where we're looking at. Again, we start to look at the investment, and here we look at about a 17% year-on-year growth in investment in renewable energy between now and 2030. And that's valued at around 1.2 trillion US dollars. There's a lot of money, there's a lot of effort, a lot of energy being spent within the energy transition phase. Some other statistics that are quite interesting is we look at 2025, renewable energy will suppress coal as the largest energy producer on a global scale. Between 25 and 26, it's predicted that wind and solar PV will overtake nuclear generation. That's in a context where nuclear generation also has a big impact in the energy transition phase. And we're seeing this more and more, particularly as people start to look at recommissioning nuclear power stations in the US for data stations. We look at the introduction of new technologies such as SMRs and AMRs, making renewables a lot more flexible and also being used in heat generation, not just electricity. We also look at COP28, when over 22 countries and 120 companies, including ourselves, signed agreements to triple the nuclear capacity by 2050. And in COP29, that was increased by more countries signing up to that, so increasing it from 22, including countries from South America, Africa, and Asia. In 2028, we also see that overall renewable energy is expected to generate 42% of the global electricity demand. So if you remember back to that graph on the first slide, even though we're seeing an increase in overall energy projects from gas, coal, etc., we are seeing that renewable one is starting to take more of a force. Next slide, please. I just wanted to drill down a little bit into one of the statistics that I've been tracking for some time. And this is about hydrogen. And I mentioned briefly earlier that people are talking about, is hydrogen actually reality? Does it have a place to play in the energy transition? When we look at hydrogen in terms of energy transition, it still does have a place to play. The technology, although innovation is needed to make it more scalable, has been around for many years. Electrolyzers have been around for many years. The technology is, in the most part, proven. Also, we look at hydrogen as one of the only transportable vectors of energy. If you have wind or if you have solar without large batteries, you have to use the energy in main where it's produced. Whereas hydrogen, once it's produced, it can be transported through different vectors to different parts of the world or to different areas where it's needed. So I was quite surprised when I ran the data for 2024 that even though what the media is telling us that hydrogen might not have a place to play within the sector moving forward, we are seeing an increase. But you'll see that I've called this slide Hyped Progress. So let me have a look at what we're seeing. So what I've been doing is I've been tracking industry data of the projects that are announced within the hydrogen space from 2021 to date. And you'll see that year on year, we've been seeing about a 40% increase in the projects that were announced. From 23 to 24, we still saw that increase, but it had got some reality check. It increased only by 20% rather than the 40% that we've been seeing in previous years. I then look at the projects that are greater than 10 megawatts. So the ones that are going to move the needle when we look at energy transition perspective, and the ones that are in our range of sight. So the ones that are in the next 5 years. And that number of projects dropped from 2,000 to 700, or around that. But that was still a decrease in trend, but still a 27% increase in the last 12 months. The interesting part was when I looked at the next data. So I looked at, okay, it's okay saying a lot of these projects are announced, but which ones of them actually have FID? Which ones of them are actually going to go ahead and be constructed? And we look at that number from 2,000 to 700 reduced to 138. If somebody said to you, though, that there was going to be 138 projects in the next 5 years going to be built at a scale of 10 megawatts, that's still an exciting and an industry that you would want to get involved in. The interesting thing was, where previously we'd only saw around a 10% growth in FID, this year we saw a 50% growth in the amount of projects in this category. The other interesting thing was they were all of a much lower megawatt than we'd seen previously. So they were all hovering around that 10 megawatt or just above. There was none of them 100 megawatts. So that's why I talk about it being a bit more of reality, using hydrogen projects where they make sense. So using hydrogen projects at this time for decarbonisation of current hydrogen assets, for refineries, for ports, for hubs, for green iron, green steel projects. So just was putting that in a bit more context about where we're actually seeing the projects. I then map that on a regional basis, and no surprise when we look at regulation, where we have incentives, where we have more clear regulation. For example, if we look at carbon management or carbon incentives, where we have non-voluntary carbon markets, such as Europe, we're starting to see more and more of these projects taking a fruition. I also understand in Europe, they have a security of supply issue. Therefore, hydrogen probably makes sense compared to other locations. So this little green in the back, this is where the FID projects are. We also saw a big increase in FID projects in China, where they're having a big push on hydrogen currently. China is currently their largest producer of hydrogen globally, and therefore there is some decarbonisation of them current assets, which makes sense. And we also saw a small movement in North America, but this was before the Trump effect, and therefore we will see how this affects that moving into next year. Next slide, please. I say just to summarise that one, where we did see the increase in projects from 24 to 25, definitely mirrored where we saw the incentives being let. So for example, USA, Europe and Australia and Japan incentives definitely drove the industry a little bit. And we saw the FID ones where that carbon market was non-voluntary compared to voluntary. So what does this mean? It's a very difficult thing because obviously things are regionalised, they're sectorised. But if we look at just as an overall impact and an overall trend, in the media, we talk a lot about the energy trilemma, and we're definitely seeing this when we look at the statistics and we're looking at the type of projects that we're getting involved in. So there's a need for energy security. There's a need for energy equity, making sure that we have fair and equitable distribution of energy across all of our world. Whether that's the developing world, making it more sustainable, the developed world, making it more sustainable, or the developing world, making sure that our full population has access to the energy it needs in the most sustainable way possible. And making sure that we do all of this in a context of meeting our net zero goals. We did a similar survey to what we're going to do in a few minutes around 12 months ago, where we looked at what were the key risks within this area. And one of the things were infrastructure availability. Renewable projects are always plagued by the investment that they need in order to get them up and running, particularly from a scalability point of view. And one of the biggest investment is often around infrastructure availability. That's where we're seeing particularly projects going ahead or getting more funding where there is collaboration and where there is hubs proposed. If I look at the incentives, particularly around hydrogen at the moment, one of the key incentive criteria is that they look at collaboration and they look at hubs across a number of different countries, including across the EU, Australia and Japan. It was access to finance, and that's no surprise. We'll talk about that in the next slides. When we're talking about energy transition or renewable projects, our FID, our financial decisions have a third and a very difficult to justify criteria. We're not just looking on return on investment anymore. We're also looking at return to the environment, return to our earth. And without a true carbon price that is global, I talked about voluntary and non-voluntary schemes earlier. A lot of the voluntary schemes non-voluntary schemes are very much just for certain locations or certain jurisdictions. Until we have a global price on carbon, then it's going to be very difficult to have this access to finance. We talk about regulatory uncertainty. Regulations are progressing and are maturing every single day. Whether we look at the new ISO standards coming in, and in 2025 there will be a new net zero ISO standards coming, or we look at the more technical standards. They're maturing as the industry matures, and therefore people's competency and understanding of these regulations is also one of the gaps that we have within the industry. And that ties into some of the lack of technical expertise that we're also seeing as one of the risks. And we also mentioned public acceptance. I was at a conference in Milan last year when Tony Blair spoke, and one of the things that he said was, when I was in power, we were having a debate whether climate change was real. Nobody now debates whether climate change is real, but we debate how are we going to be able to solve climate change. And I guess that's the public acceptance about which is right. We've still got the not in my backyard, and we have to make sure that everything we do is transparent and that we avoid greenwashing. So what do we need to address this? So I think I'll go on to the next slide to talk around this. Next slide, please. So before we do that, let's readdress the criteria, and we'll have a new poll. So the poll is, what do you see based on where you're working, what type of industry you're working in, what type of organisation, or just what you feel from the media, do you see as the biggest challenges in scaling renewable energy? Is it infrastructure availability, access to finance, regulatory uncertainty, public acceptance, or lack of technical expertise? And just as I expect, the access to finance and regulatory uncertainty are pole to pole, first position there. And that's exactly what we're seeing. We talked earlier about projects not getting past feed study, projects not getting past concept study. And even though there is incentives, some of them incentives are difficult to unlock. They cover a lot of different regimes, such as cyber, such as being able to show that you've got a social outlook, a human rights outlook into your supply chain, making sure that you have technical, I'm thinking about electrolyzers, for example, 22734, you'll be able to certify to that. So access to that finance, unlocking that finance, having the right conversations with financial institutes is exactly where we see some of the risks there. And absolutely regulatory uncertainty. There's been a lot of movement, particularly in the last 12 months. But what we saw happening in the standards and regulatory space is they started off retrofitting existing standards and regulations to meet this need. We're now seeing new and evolving regulations and standards specifically tailored to this industry. And that's going to make a big difference. But a lot of people working in this industry are coming from an oil and gas, are coming from a power background, and therefore there's a lot of uncertainty. We don't know the standard inside out. Regulations change when we're halfway through projects, so we need to make sure that we've got an eye on the regulations all the way through the projects, and we get the right consultancy and technical expertise working on them. Next slide, please. So we talked about what are the key areas. We're seeing bigger, we're seeing bolder projects out there. We're also seeing more realistic projects as we move into energy transition of existing assets and ones where it make more sense. But as that poll showed us, we're working to have more projects, but we need more projects in a sustainable way. Therefore, from a FID and from a finance perspective, it doesn't always make sense commercially. Therefore, we have to look at things differently. We have to look at how we make our supply chain more efficient, how we make our technology more innovative to make it more efficient, and how we make things more scalable. Particularly when we look at an infrastructure perspective, how do we make things more collaborative? So this slide just really goes through what are the key risks, if I was to summarize everything that we're seeing within this space. Sustainability expectations, navigating the energy transition, whether that's understanding the technology, understanding the supply chain, understanding the regulatory perspective. Complex and under pressure supply chains. Like I said, we're not just doing renewable energy, we're doing renewable energy at the same time as oil and gas projects, who a lot of them need the same material, need the same types of equipment. How do we know which suppliers to go to? Which ones are the best? Which ones are the cheapest? Which ones can we rely on? We're working in a new space. Responsible adoption of AI, particularly as we look at infrastructure and we look at different renewable projects coming online in different networks. How do we use AI within our supply chain to get some of this data and this red flags right up front? How do we address the competency gaps and regulatory compliance associated with them competency gaps? We talked about one of the areas of energy trilemma being energy security. One of the main areas of energy security, particularly as we start to look at data centers as well, and also energy for hospitals and for our everyday infrastructure, is cyber risks. And how in this ever-evolving supply chain and ever-evolving complex supply chain do we make sure that we don't have counterfeit and fraudulent materials? Quality, counterfeit, traceability is always an issue when supply chains are under pressure and supply chains become more complex and more constrained. Next slide, please. So if we use the phrase Assurance 4.0, what are we doing to address some of these risks? What are we doing to make sure that we have a one approach, a single approach across all of these different risks? And I guess what we have to do is not look at these risks in isolation. Look at these risks across the whole portfolio, across everything that we're doing within this space. How do we make sure that what we're doing in this space, we understand what we're getting ourselves into, we understand where our gaps of knowledge, where our gaps of expertise are, but also we understand where the gaps in regulations are. Do we need to plug them gaps? And also, how do we look at the risk of a supply chain from an overarching perspective, from both a technical quality, social and human rights risks, and also across carbon, making sure that everything we do is the most sustainable and reducing carbon as much as possible. I'll give you an example of that. So if we look at buying a wind turbine, for example, and we look at the wind turbine material, one of the biggest human rights risks that we found is within the material sourcing within that wind turbine. So we need to look at that. Where are we best placed? We might need to put 1,000 wind turbines into our project to be able to give us the volume of gigawatts that we need. Therefore, we need to be able to source in an economical way. We therefore might need to source it from a location that isn't close to where the project is. We then have logistical issues. We look at the size of wind turbines. Logistically, some of them can't be moved. But if they can be moved, what additional carbon are we adding to that supply chain in order to get that to where we are, managing also the financial risks associated with it? So we need to look at optimizing the life cycle of our products, right from the technology, supply chain, all the way through to it being at site. We need to make sure that we've got transparency right the way across our supply chain and mitigating social and cyber risks right from the start, And some of that is education within our suppliers and also within our procurement and our technical teams. And throughout all of this, we need to make sure that we've got a handle on the regulations. How are these changing? What are the new carbon incentives coming in? What happens if I buy something in one country, produce something in one country, want to ship to another country? What carbon incentives take shape there, and what does that mean to my operations and my project? Next slide. Okay, so let's just have a very quick look before I pass you on to Andy, where he's going to look at some of the more social and supply chain overarching impacts about what solutions LRQA brings. And in that last slide, I talked about that it's not a single risk that we're seeing. We're seeing an increase in supply chain complexity, an increase in regulation uncertainty, an increase in the lack of technical expertise and competency, and all this in a context where supply chains are becoming more complex and under constraint. So we split our services into 4 main categories, but really all of that is around technical expertise and transparency. So in the assessment space, we look at, do you have the right management systems in place? Are you able to verify what you're doing? Do you have the right certifications in place to make sure that you're producing and you're operating in the most sustainable and correct way? In that space, in energy transition, there's a lot of changes happening in 2025. So there's updates to 5001 energy management. There's updates to 1467 and 14064 in greenhouse gas management and carbon footprint products. There's, as I mentioned earlier, a new net zero standard with particular focus on renewable energy being produced or being let to the industry. There's also, as I'm sure you're all aware, in some of the traditional 9,000, 14,000, 45,000 standards, there's now also a requirement to look at energy transition and look at carbon. So there's a need to have climate change strategy. Who is the environmental responsible person? How do you manage carbon emissions, and how do you manage climate change within your organisation? We then support you in inspection, so making sure that if you're putting new products or new equipment into your facilities, they're of the correct standard. We can track the supply chain to make sure that they're transparent. We have got a reduced risk of fraudulent equipment, and we can also help through expediting, etc., helping you to make sure that you're specifying the right regulations and standards for the equipment going to your site. We also have an intelligent platform, which Andy will talk about, where we look at data and insights from across a number of different supply chains and support you to understand the carbon intensity and the human rights and social impact for your business. And this is all coupled, as I said, with a real cybersecurity impact. So from an energy security perspective, making sure that you understand the cybersecurity risks and imagine that throughout your supply chain and your operations. Next slide. I'm also very pleased to introduce, we've done 3 recent acquisitions, Reset Carbon, Ergon Associates, and most recently, Eco Engineers. We see the real risks within that space being around regulatory compliance, and Eco Engineers brings in some real competency, technical expertise and experience to help you to understand the different regulations, different incentives across your supply chains, particularly in association with carbon credits, etc., if that's voluntary or non-voluntary. So we're really excited to introduce them. They also bring together expertise across a range of different industries, including biodiesel, SAF, sustainable aviation fuel, hydrogen and biomass, therefore increasing our portfolio where we're able to support you through this energy transition. Next slide. So without further ado, I'll introduce you to Andrew Gibbett, who's going to take you through some of our supply chain confidence support functions. Thanks, Andy.
Great stuff. Thank you very much, Leanne. Good morning to you all from a very sunny United Kingdom this morning. Great to be with you here today. So before we get into this topic of total supply chain confidence, we are just going to ask you to complete one more poll, please. So continuing on this topic of supply chain risk, we'd like to find out how prepared your organization is on supply chain risk management. So where do you stand on this? Is it A, we have a robust and thorough risk management program across our entire supply chain? Is it B, we understand our supply chain risks and we're working towards managing them? Is it C, we know we need to be thinking about this, but we haven't really made a start? Or D, what's supply chain risk management? So we'll just give you a minute just to finish answering that. In the meantime, I'll just describe to you what we're going to go through in this part of the session. So I'm going to start by talking about our take on supply chain risk in 2025. Firstly, overall, and then looking at some specifics for energy and renewables, using some of the data that we have from EiQ. I'm then going to introduce you to EiQ and tell you a little bit about our approach for managing supply chain risk and ultimately for achieving total supply chain confidence. And I look forward to answering hopefully some of your questions on this as well a little bit later on. Okay, if we can just close the poll and go back to the slides, thank you. And then we'll look at the results to that in just a moment. But just to describe then, so we've identified 8 top trends in the global supply chain risk environment for 2025. Now, we published a full report on this in January, and some of these predictions are already coming true at almost an alarming rate. But I'd encourage you to go to eiq.com, download that report and have a closer look at all of these. In brief, though, we see these key trends. So firstly, we see that the gap between ambition and reality is really growing. So we speak to fantastic people every day who work in this area, who are really committed and who have great ideas. But typically, those people are not yet ready. So they don't have the tools, they don't have the processes, and sometimes they don't have the resources to manage their risk and to meet their ambitions. So if we can just test that out really, please, by just going back then to those results from the poll. So let's have a look. Actually, some of you feel that you have a robust program right across your supply chain already. Great. Maybe there are still some little gaps that we can look at filling in. Most of you are aware of those risks and managing them, are working on managing them. And just a handful of you are really just starting out on this topic. Don't worry, you're in the right place. All right, so we are all on the journey. We're at different aspects, but we're all on the journey on the way. Can we just return, please, to the trends? Thank you. All right, so secondly then, the next trend that we see is the regulatory agenda is becoming ever more complex. So again, we published some resources on this. We put out a podcast a couple of weeks ago on what's happening in the EU at the moment. On the face of it, what's happening in the EU is a pullback on legislation. But in reality, it's really just adding more complexity, in particular, given the existing levels of inaction in the different member states on that legislation. And underneath that, legislation is also penetrating into previously uncharted areas, such as biodiversity, deforestation, and some product-specific domains as well, such as the EU battery regulation. And all of this has a significant impact on energy and renewables in particular. Thirdly, then, geopolitical shifts. Now, there's not a lot that needs to be said about this one, particularly at this point in time, but to put it simply, shifting politics drives shifting trade, which drives shifting risk. And this is certainly the case for manufacturers along the energy and renewables supply chain, including shifting sourcing to maybe less stringently regulated markets. Next then, data. So a few years ago, we were all trying to work out how to get the data. Now we all have it in abundance, but we don't yet know how to really use it. So we need the human expertise, we need the data quality, and we need the tools to really make it actionable. And AI is a big part of that, but without all of these aspects in combination, we'll just continue to drown in unstructured, unwieldy data. Then we have shifting attitudes towards supplier relations. So we're no longer in a world where buyers can rely on supplier leverage, particularly given that shifting trade landscape that we see. So those who succeed in managing supply chain risk will be those who focus on collaboration and on building trust-based partnerships. We then have some really surprising risks actually popping up in our data sets. For example, higher child labor risk in the US or migrant worker risk in Australia. And again, many of these are driven or at least impacted by these geopolitical shifts, which prompt things like nearshoring or reshoring. Oftentimes, these things don't actually reduce risk, they just shift it somewhere else. We're also seeing synergies between different risk categories. So we have vast data sets on sustainability risks, but we also have some really good data on product integrity and beyond that into things like cybersecurity. And what tends to be the case is that risk really permeates from one of these categories into another. And finally, then, investors continue to hold a lot of cards in this conversation. So think in particular about sustainability. You may be getting mixed messages from your regulator about your compliance obligations, but the chances are that your investors are demanding more and more. And our research continues to show that investor interest in sustainability is still rising, regardless of what is happening geopolitically. Okay, next slide, please. So there's a lot going on here, and the way to begin to address this is to start to understand your risk landscape. And from there, we can start to address it. And that comes from the data. So our data covers a broad set of risks across a really granular set of sourcing categories, products, and regions. And just to give you a glimpse of some of that data, which applies to energy and renewables in particular. So firstly, we see very high supply chain risk for solar cells production. So our risk scores are out of 10, with a low score indicating a higher risk. So solar cells here and wind turbines both have a significant degree of inherent supply chain risk. And akin to what Leanne was mentioning earlier, that's both in manufacturing operations and deeper back into raw material sourcing. But actually looking at these two categories, there's actually quite a delta between the two. And then when we look at some of the key sourcing geographies for energy and renewables, we see where some of those risks lie. So we're looking here across Malaysia, Vietnam, and China, and we see here already that the risks are quite diverse. So health and safety risks, very well known to the energy sector, but the most problematic categories that we see are actually around labor, environment, and ethical business. And these are really some of the categories that are at the heart of legislation, and again, at the heart of investor demands. And of course, this is just a snapshot of countries. So there's also surprising risk in Australia, as well as other key energy sourcing regions like South Africa, like the US, Saudi Arabia, and the UAE. And we see risks like this actually at all points of the supply chain, whether it's in mining, mineral supply chains, or further downstream around insulation, constructing, or decommissioning. So having insights like these ones enable our clients to dig deeper into root causes and to understand where mitigation or remediation is most needed. But before we get to that action, how do we know this? Where does this data, where does this intelligence come from? And if we can move on to the next slide, please. Okay, so at EiQ, we essentially have three layers which combine into this unrivaled data set of more than 85 million data points. So firstly, and most importantly, we have proprietary data. So primarily this is from audits, including those audits which are done by LRQA, which alone total more than 30,000 per year, alongside audits done by third parties. But we also have worker grievance data from the grievance mechanisms that we manage, and we have training course completion data covering more than 1.5 million training sessions done by suppliers in our clients' supply chains. Secondly, then, we use AI to scrape media mentions and sanctions list updates from the public domain, and that covers more than 500,000 suppliers. And thirdly, we incorporate data from more than 50 publicly available risk indices to supplement that, which adds another 500,000 data points, 500,000 index values. So all of this then passes through our AI, adding context and intelligence to enable you to observe and interrogate that full risk landscape with a unique degree of granularity. Now, I'm a bit biased here, of course, but recently we were recognized by Vedantix, who are a neutral third party, as a leader in this space. And actually together, EiQ and LRQA were the only organization to be named by Vedantix as a leader in both the technology and the services side. And I think this is really testament to how unique we are in this space. So we are the only organization that has this depth of data, and we're the only organization that combines that with such deep human intelligence. If we can move to the next slide again, please. So really in that spirit, then the data is just the beginning, and it's what you do with it that counts. So this here, in a nutshell, is the EiQ methodology to move from awareness into action. So the EiQ journey starts with using all of that inherent risk data and overlaying your supplier details to get a global view on your individual risk landscape. You can then prioritize your high risk areas directly in the tool, whether that's segmenting risk based on geography or looking more end to end at a particular product, taking a traceability approach to connect the different tiers of your supply chain. And from there, you can plan and action your remediation efforts. So this would normally center around your audit program with corrective actions and remediation as part of that, but you can also deliver supplier training directly within EiQ using our vast multilingual digital training catalog. And for all of this, for all of these different elements, that supplier collaboration is done directly in the platform. But risk mitigation is not a one-time exercise. So our tools will be scanning your suppliers in the background in real time, alerting you to issues and incidents as they arise, whether those incidents are reported in the media, whether they are sanctions related, or whether they come from a worker helpline or another grievance mechanism. And finally, then you can use EiQ to consolidate, to visualize, and to report your data to meet your obligations with all of your stakeholders, whether regulatory or otherwise. Next slide again, please. Just to say really that this is quite theoretical, but it really comes to life when you look under the hood. So we don't have time for that today, but if you're working in this space, I'd really encourage you to book a quick demo with one of our experts. So within 20 or 30 minutes, you'll get a really clear picture of how this process works and on how we might be able to help you with your specific challenges. That's it from me. Again, please do continue to drop in your questions. In the meantime, I'll hand back to Josh, who'll be facilitating our Q&A.
Thank you, Leanne and Andy. Some really great insights there. So, as Andy mentioned, we are now at the Q&A section of this session. So, we've had a number of questions come through, which I'll begin to ask in a second. But you should all be able to access a question panel up towards the top of your screens. By all means, add any questions into it. And again, if we don't get through everything today, we will look to answer those afterwards. So I'm going to come to you first, Leanne. So we've had a question. Where are the biggest knowledge or skills gaps when it comes to managing energy transition projects?
Yeah, really good question. And it's a really broad question as well. But I think if I was to summarize, it's around understanding of the standards and regulations. In fact, I'll give you two. I'll give you first answer, then I'll give you a second answer. So like both myself and Andy have said, the regulations are changing all the time. The regulations might be different based on your investor compared to the local government. So things are very transparent. Things are very changeable all the time. Yeah. And often not very transparent. So often it's not easy to understand where the changes are happening, when they've happened. I don't think it's necessarily a skills gap. I think it's more a confidence gap as well. So we see people who are entering this sector, who've worked in oil and gas sector or power sector for years and years, understand the standards inside out. They might see a change every 5 years. They're now working in an industry which is much more fluid. Yep. One of the examples we've had is, for example, a manufacturer who was manufacturing, sent it to Europe for many years. Now that equipment he needed to send to different jurisdictions. He didn't understand the regulations within them different locations, different countries. So we supported him to understand that. So yeah, it's more the confidence and also things changing a lot more rapidly than we used to. The other thing I'll give the example is in carbon capture and storage. So we haven't mentioned that, but carbon capture and storage actually has a big play and a big impact within energy transition, particularly when we're talking about extracting the oil and gas from the ground. What are we going to do with the excess carbon in order to meet the net zero targets? We find in that space, for example, that suppliers, designers, etc., don't necessarily have the expertise, the technical knowledge of how that high intensity carbon is going to react with their materials or with their equipment. So there's also that technical gap as we're moving into new technologies or we're moving into new sectors that we've not necessarily worked in before.
Thanks, Leanne. And again, we'll stay with you for this one. We are seeing much bigger renewable projects. They're getting larger and more technically complex. How is that changing the types of risks that you need to manage, especially around construction or long-term performance?
Yeah, that's a really good question. And we are seeing things becoming more complex. So I spoke in my presentation about a reality check. So we're seeing them on the smaller scale, but we are also seeing the larger scale projects that are really going to move that needle in terms of net zero. So some examples of some more complex projects that we've worked on is the NEO project in Dubai, which is a 900 megawatt solar project, just one phase of a much larger scheme as well. But that's thousands of solar panels all going to a CSP plant. That in terms of the volume of equipment that you're buying and therefore the complexities within the supply chain, you can't just necessarily go to one supplier, you have to diversify your supply chain, you have to reach out to new suppliers, is some of the risks that we're seeing. And also these projects tend to take longer. They're of an unprecedented level that you've not necessarily got the skills or you've not necessarily got the precedence in order to know the time that it's going to change, the resources that you're going to need. So things tend to span out. Another example is the Snowy Hydro project that we're working on in Australia. That project was a lot more complex in terms of the tolling that I needed to do and the different fault lines that it was going through. So from that construction perspective, it was unprecedented, and that's seen delays. So not only are we seeing the financial investment decisions being halted by, does it make sense financially? We have to make it work because we need to make it work from an environmental perspective. But then in order to make it work, sometimes they are much more complex and therefore things do take longer and therefore add more cost.
Perfect. Thank you, Leanne. And we're going to come to you next, Andy. So we've had a question that is, you mentioned supply chain risk monitoring. What makes EiQ's approach different from other platforms on the market?
Yeah, thank you, Josh. Good question. There are heaps of platforms out there, of course. At the risk of sounding like a broken record, what really makes us different, firstly, is our data. So there's lots of tools out there that use publicly available information to generate risk scores. There's loads of media scanning tools out there, and there's plenty of platforms to help you to manage audit programs. But there aren't really any other tools which have this 360 approach to data, and in particular, pulling in hundreds of thousands of audits. Now that's a real game changer in terms of that on the ground intelligence, plus that e-learning data, plus that grievance mechanism data, plus the publicly available data on top of that. And so it's the depth of that data and the quality that comes from those audit data points that really provides that quality of insight. And then secondly, again, is the connection to that human element. So we have the people in LRQA on the ground doing those audits. We have subject matter experts in virtually every area of supply chain risk. And those people are working with EiQ themselves. So they're actually helping to shape it going forward. So as well as being able to access their expertise directly through the combination of EiQ and LRQA, it's those two things working together that is really powerful and again, I think really quite unique to us.
Thanks, Andy. Back to you now, Leanne. So we've had a question here from the audience just on, do you think the benefits of major manufacturer and fabrication projects, particularly for offshore wind, will be seen in the UK in time, or will it continue to come from Far East and Europe?
Really good question. I think it's that cost benefit analysis and that we look at. We need to make sure that the projects are economical, but we also need to make sure that we're making the most of localization and building where we need the projects. I think as wind turbines get bigger, then the logistical issues increase, and therefore we still will see some localization. That's one of the aspects. I think there's always going to be a mix. There's always going to have to be a mix of overseas and in-country construction. Yeah. I also think as the industry matures and the technical expertise matures within countries, therefore we'll see more. It's a scalability issue, right? The more industry you have, the more technical expertise you have, the more you do in country. If we look at some of the different countries around the world, a lot of them do have localization elements built into contracts. So that in order to benefit local economies, a certain percentage of the manufacturing has to be done within that country. That makes sense from a carbon perspective, but also makes sense from being able to generate jobs and generate technical expertise within the particular country. So to summarize, I would say it's a scalability issue. It's a cost versus analysis. And it's also, as we see things get bigger, it makes more sense for them to be in country.
Thanks, Leanne. And then back over to you, Andy. So can you walk us through how a company might use EiQ to respond to a real life supply chain risk in real time?
Yeah, thank you, Josh. Good question. Firstly, perhaps I could kind of contrast that with a non-real-time approach or a kind of traditional approach of annual audits. So if you can imagine, auditor goes to a supplier site, does the audit. From the time then that they leave the site, or even from the time that the corrective action plan is closed, there's still a long period between that point and the next scheduled audit, and really anything could happen in that time. So in contrast, then, a real-time approach means that between audits, or also for sites that you don't actually audit at all, you'll get alerted as soon as we pick up an incident, which could be something in the media, could be an updated sanctions list, or it could be a worker grievance. Now that then, along with our inherent risk data, which is also updated also during the year, gives you that constant awareness. In terms of what a response might look like, that could then be liaising with the supplier directly to request information on an incident. It may be implementing something like supplier training or maybe another mitigation measure, or it might even be then requesting an audit. But it's just that closing of that gap is the removal of really quite a prolonged blind spot that you could have between an audit cycle, which really makes that real-time approach valuable.
Thanks, Andy. So one for you here as well, Leanne. What are some of the biggest compliance challenges organisations are facing with new energy regulations continuing to evolve?
Yeah, it's a difficult question, that, because I could take it from a manufacturing standpoint, I could take it from an operations standpoint, but I would say it's when regulations aren't the full pathway to regulations for a project to go ahead isn't in place when you start the project. So therefore, you've always got that inherent risk that something might change, whereas your project won't no longer make sense from an economic point of view or no longer meets the regulations. So what we try to do when we're advising companies in that situation is to look at best practice approach. So if there are gaps, or you do think that's something evolving, look at what's happening elsewhere in the world and take that as a best practice and implement that, so that you've mapped out the possible risks as much as possible. I see it from a manufacturing perspective, particularly when they're looking at exporting to particular countries that they haven't done before, and they might not be mature as other locations, and then they change the rules in terms of what can be imported. But we also see it as an operator's perspective. For example, if they're producing a product that they're looking at exporting, and then the carbon regulations change and they can't export to a particular country, then the all economics change. So I would say an advice is to look at best practice globally and implement that if there is gaps or if there is risks, and then also have several options. So don't put all your eggs in one basket. Look for certain options for export or for both products and equipment.
Thanks, Leanne. I think that is pretty much us at time for today. We're right on 10 o'clock. Thank you, everybody that's joined this call. Thank you for the engagement. Thank you to Leanne and Andy for the great insights as our speakers as well. We will follow up this session, as we said previously, with the slides and the recording as well. So please do keep an eye out for those. And in the meantime, have a great day, everybody, and thanks again.
Thanks, everyone. Goodbye.
Thank you all.